There's a lot of excitement during India's first G20 presidency, and I'm speaking now with Ms. Gita Gopinath, who's the first Deputy MD of the IMF. Ms. Gopinath, thank you so much for speaking with us. It's always a pleasure, and it's great to be able to speak to you during the G20 here in Bengaluru.
Thank you so much, Tamanna. Happy to join you.
Let's begin with a statement that you made saying that the world is looking forward to India's presidency of the G20. The world will be watching. Why do you think this is an important moment for the G20? There's been a lot of times when people question the relevance of these groupings and what do they actually achieve for the world. But do you think that this time is a very crucial one, especially for G20?
Indeed. The world is going through a challenging period. There are many big issues that require global cooperation. So if I were to just name some, one would be food and energy security. The other is on issues of debt. We're seeing what happened to the crypto landscape. If there is action to be taken on that front, it will require international coordination. So the many issues that require countries coming together and working together, which is why the G20 plays a very important role at this point. And India having the presidency is really critical to this. India has been championing the global south to make sure that there is sufficient financing going to low-income countries, and that's going to be very critical looking ahead.
So you've already had a set of meetings, and is there anything that you can share in terms of takeaways? What have been the hot topics right now? Is the focus largely on cooperation, debt management, especially for low-income countries which are beaten by what has been happening in the last 1 year with geopolitical tensions?
So in terms of the areas we've covered, we've looked at the global outlook and the main challenges that the world faces. Again, in the issue of food and energy security, there have been important steps that have been taken that have come out to work at the G20. This comes from Indonesia's presidency, but it will be taken over by India to ensure that there are not restrictions on exports of goods, food coming out of countries, making sure to minimize supply disruptions, finding a way to keep energy prices stable so that there's not the kind of tremendous volatility that we've seen around the world. All of that is important to deal with the cost of living crisis that we're seeing. So that is an important part of it. The second is on the debt front. We have about 60% of low-income countries that are already either in debt distress or on high risk of debt distress. The G20 produced a common framework to help countries resolve this debt problem. And there's been progress that's made on it with a couple of countries, but a lot more needs to be done. And I know that India is on the forefront pushing for concrete actions to get much faster debt resolution for countries. So that's another part of the discussion. Sustainable finance is a big part of where we need cooperation in terms of climate finance, again, especially for the global south. Also making sure that technology transfers happen and so on. So I think these are all issues for which it could not happen if we didn't get all the relevant countries in the room to have these
What about crypto taxation, the crypto asset landscape? Because that's one ball that always gets lobbed into the court of international cooperation and understanding. Every nation is trying to figure out what to do, and we've had this whole crypto blowout. Is that on the agenda at all, and your thoughts on that?
Absolutely. It's actually a key part of the agenda because, Tamanna, like you said, a single country can't deal with this problem on its own because the borders in that sense are porous. It's digital, and so it can escape very easily. And so therefore there was a lot of action being taken on that front. At the IMF, we are working very closely with India on coming up with principles on what regulations might look like, but more importantly in terms of what the consequences can be for the macroeconomy, how it affects cross-border capital flows, the risks to monetary sovereignty and so on. And we're working, the IMF is working closely with the FSB and the BIS and these other institutions that are very key to regulating crypto on the global landscape. And I think this is the year when hopefully we will have substantial progress in this matter. I think this has been slow coming.
I think it's interesting you referred to it as a problem because the central bank in India definitely sees crypto as a problem. Is that a view you share? Because this is something that has divided people. They're the crypto zealots who believe it's the next coming. and those who think it's going to destroy the financial system. I'm curious to know your own views.
The way I think about it is there is the technology that underlies a lot of these new financial instruments, the cryptography that underlies it, the blockchain technology that underlies it, that has the potential of solving some of the problems that we have grappled with, including cross-border payments, financial inclusion. You can have smart contracts, because if you tokenize money, you can have much more, you can have smart contracts that help, including in terms of issues of governance. So I think there is the promise of the technology, but that said, the manifestation of that in the current form, as we've seen with the meltdown in the markets, is that without regulation, it's like the Wild West. And you had, companies, very highly valued companies, that basically were not following the right practices, and you've seen the meltdown that's happened. And that is consequential for investors and for consumers. So far, all of that has been contained. I mean, thankfully, we've not seen spillovers to the broader economy from this meltdown. But we can't take that for granted, and that's why we need to make sure that we have the right regulations in place.
Let me turn to the world economy. The last World Economic Outlook that the IMF put out did another downgrade for growth, global growth, to 2.7%. I know your next numbers will be out early next year. Is it going to look worse? Is 2023 going to be worse than expected earlier?
I think it's still a little early to pin that down, and I'll tell you for the following reasons. Because compared to October, the third quarter of this year for the US and Europe turned out to be better than expected. And in fact, it turned out to be better than expected for a few other countries too. So the global outlook was in some sense surprised on the upside. But what we're seeing in terms of the fourth quarter high-frequency data is in line with the slowing that we are projecting for next year. And the country for which we've had the most significant, I would say, deterioration in the outlook has been for China, just in terms of the numbers we're seeing at the high frequency. And that has implications for what we will do with the numbers going forward. The reason we think next year is going to be worse than this year is because that's when we will really see the consequences of all the monetary policy tightening that's happened around the world. Because, as we know empirically, it affects it with a lag. And so we will see that happening next year. But there's still a lot of uncertainty. I think the energy markets are still a source of risk. We could see prices going up or down. There's a lot of volatility that can come in through that. Again, China's economy, how it performs, is again a source of uncertainty. But we'll have numbers in January.
So just about a bit on the energy part of it. Crude has been cooling off recently, largely on fears of a China slowdown. Is that a relief of any kind at all in terms of energy prices, or do you see the situation worsening?
The fact that energy prices are coming down because people expect a global recession is not the best way to bring prices down. Being able to increase supply would be a better way of bringing prices down. But yes, I think for countries that are energy importers, the decline in prices that we're seeing certainly will help. On the other flip side, countries that are commodity exporters, and there are several emerging and developing economies that are in that space, will now find themselves maybe more exposed to global financial conditions and the tightening that we've seen. Because what we've seen recently is that countries that are oil exporters, for instance, have been somewhat shielded, while those who are importers have been more affected by it, including when it comes to their currencies. But that can change if this equation flips around.
We're talking about a global recession as a given at this point?
No. In fact, our baseline is for global growth to go down to 2.7%.
That's right.
If I want to think of when is it that you have something like, it looks like a global recession, you have to go significantly below that. So there are rare circumstances when growth goes under 2%, which is usually associated with the global financial crisis, the peak of the pandemic, and so on. But that's not our baseline. But we certainly have downside scenarios where that might happen.
So if I speak about the possibility of recession in America, is that a fear on the horizon?
given the amount of monetary policy tightening that's happened and the fiscal policy tightening that's happened, we expect growth in the U.S. to slow some more, and we expect unemployment to go up some. Now, whether that would be in recessionary territory, I think, is to be determined. The way we see it is we think that it's a pretty narrow path to avoid a recession in the U.S., given what we're seeing in terms of these fundamental drivers. But that said, if you look at data even up until now, there is a lot of resiliency in private consumption. There's a lot of strength in the labor market in the U.S. So we're going to hold on to see what happens in the next months.
Does it look grimmer for Europe?
Europe, because of them being more directly impacted by Russia's invasion of Ukraine and the consequences on gas prices, yes, they are much more negatively impacted. We've seen, for instance, a bit of a divergence in how retail sales are looking in the U.S. relative to Europe. U.S. is strong. The more recent data that came in for Europe was much weaker, in line with our projection that we will have about half of Euro area countries that have negative growth in the fourth quarter. So it is a tougher time for them.
Let me come to the one number everyone's looking out for, the Fed's action. It will be the last this calendar year. What are you penciling in? Do you think the Federal Reserve will ease up? And broadly, do you see central bankers continuing to hold the reins very tight?
On the positive side, they've had a second month of inflation coming down, yes, and surprising somewhat on the downside. This is particularly true for headline inflation. Core inflation has also, in terms of the annual rate, is still high at around 6%, though monthly that rate is coming down. So things are moving in the right direction. But, when inflation is still at 7% and core inflation is at 6%, well above the 2% target, I think the Fed will need to stay the course in terms of making sure that inflation comes down back to its target. Now, it certainly helps that the dynamics are moving in the right direction, which means that the pace of increasing interest rates will moderate relative to what we've seen in the last couple of rounds. And then the question is, how long do they hold on to that higher level? Given most projections that we see, it would take a while for it to come down.
Let me turn my attention to India. Once again, I have your October data to go by, but a slew of agencies have recently released their India outlook. One has upgraded it, the others have downgraded. The ballpark seems to be between 6.8 to 7% of growth this year, maybe about 6.1 odd for next year. How do you look at India relative to what is happening in the world? We know recession is off the table when it comes to India. But do you think that this whole narrative that this is a bright spot relatively stands true?
So our growth numbers for India that we put out in October was 6.8% for the fiscal year 22, and then for the next year 6.1%. The data that we've seen since then are in line with those projections. In terms of how India is performing relative to other countries, it's certainly, as we say, a relative bright spot because we have about a third of global GDP of countries basically contracting either this year or next, right? So given that tough landscape, India certainly is relatively doing well, and it's had a few quarters of over 6% growth, and that helps in terms of, again, closing the gap from the sharp contraction that happened in 2020, right, in terms of coming back to the pre-pandemic path. And so we've seen private consumption recover well in India. Investment is doing well, and we expect investment to be an important engine of growth going forward. Private consumption growth will probably slow some just because of, what we saw this year was also coming out of the pandemic and the spending that came with it. So there are several things that are going well in India right now.
But broadly speaking, do you see inflation as a big red flag also easing. We've had a relatively decent inflation print, the latest one, which has come in at an 11th-month low, or at least the lowest this year so far. Do you see inflation easing up and the action of monetary policy tightening beginning to pan out?
So India's headline inflation has now come within the RBI's band. But that said, you know, an important part of a reason for that is coming from food prices. And we know that food prices are highly volatile, so I think we should be a little careful before one declares success. The more stickier components of inflation remain at the upper end of the range at 6%. And therefore, the way we see it is that, you know, the RBI has done well to raise interest rates by around 225 basis points since the middle of this year. But, you know, we think that it will likely need more tightening, though the exact magnitude and the pace at which they do that should be data dependent.
Along with the CPI print, we also had an IIP print. We had industrial production contract quite a bit. Now, some of that could be a bit of base effect, but do you think that that's sort of a focus area as far as the Indian economy is concerned? Broadly speaking, consumer demand tends to prop things up. Agriculture has relatively been doing fine, but on the industrial production side, on the investment side, there's still a bit of lag.
Industrial production is another indicator that tends to be very volatile. So, you know, one would have to go into the specific components of it. What we are seeing is the continued recovery in private consumption, in investment, and this is not just private, of course, public investment has been strong. We think that the government will be able to achieve some of the goals it had set for itself on public investment spending, and that will again catalyze more private spending. I think among the concerns for India would be on the external front, because with the global economy slowing, external demand will slow, and that has a headwind. The second is with tightening financial conditions around the world. That also will have implications for India.
Let me talk a bit about China, because China has been a concern in terms of their COVID containment measures. It seemed to work initially, but zero COVID seems to not be working anymore. They face protests, slowdown, etc. How do you see that story panning out? What would you be looking out for as far as the Chinese economy is concerned?
Zero COVID worked very well for China at the start of the pandemic. It has done extremely well if you look at any indicators of deaths from COVID and hospitalizations from COVID. But with the evolution of the virus and what we have in terms of the vaccination rates in China, you know, we have a very exposed population at this point. So only about 40% of the population that's 80 and older have 3 shots of the Chinese vaccines, which is what you need to get sufficient protection against COVID. So one has to really bring that up. So at this point, there is a tension here, which is for the economy's perspective and also for what people want is the opening up. But at the same time, there is indeed this risk of having a big increase in hospitalizations and overwhelmed hospital system. And that's the trade-off that they have to deal with. So I think it is going to be a turbulent next few months.
Just talking about China from a broader perspective, post-pandemic, the conversation was about reducing dependence on China as a manufacturing hub for the world, or, you know, sort of hedging your bets for nations. And the India story actually grew at that point to offer up as an alternative for investment, for manufacturing. Do you see that panning out over the last couple of years? Do you see that opportunity there?
So I just step back. One of the things we are concerned just more broadly is that we have a global fragmentation when it comes to, for instance, international trade. Countries indeed need to build resilience to supply shocks that they've seen come out of the pandemic, come out of the war. They certainly need to do that. But we are worried about this becoming a very slippery slope. Now, to your specific question of how does this place India, I'd say yes, in this context, India does benefit from countries wanting to diversify away from China. And so that is a positive for India. In the past years, I think given that India has built up a lot more of public infrastructure, the whole digital public infrastructure is very strong in India. I think that is generating a lot of optimism about investing in India, and that's a positive. This is a good step forward. India needs to integrate more with global supply chains. Of course, there still remain some challenges when it comes to labor markets, when it comes to land. But that is, I think this is an opportunity also for India to seize.
I know you have a whole day of meetings and we'll wrap this up, but because you're here in India, do you know how much people here also look up to you, how proud we feel that you're the first Deputy MD, and we're completely appropriating all of your success. So what is sort of your message to people who have been tracking your career and feel so excited by all of your achievements?
Thank you. And I feel very humbled by it. It's, when you tell me that, it makes me feel very nice, a bit emotional too, but thank you. And I owe a lot of what I am today to my education in India and my many years of living in India.
You've always kept that connect though, haven't you?
Absolutely. It's a part of me.
All right. Thank you so much, Ms. Gopinath. As always, a pleasure to speak with you.
Thank you.